Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, to this week's episode of the Fiscal Physical Podcast. My name is Aaron. I am here with the founder of Alchemy Wealth Management. Ryan, do you ever call it AWM? Because, we're in an industry, or you're in an industry where they use a lot of acronyms.
Yeah,
that's curious.
That's a good question. We do. Like in a lot of my compliance documents, like if you go Google what's called an ADV, of course, another acronym.
Sure.
It's I use AWM like everywhere in there for Alchemy Wealth Management. My client agreements have AWM in it. I don't know out of any, I don't ever use AWM in like normal day-to-day speak, but in a lot of my like technical compliance documents, they all use it.
That's funny. That's interesting to see that it's definitely there's a lot of acronyms that you can use. And I was wondering, this is a company. It's got three words. It flows well off the tongue as well too. So cool, man. Well, we're going to jump into this week's topic. We're going to talk about environment, social, and governance. Governance. Okay, it's gonna be a tough one here for me, but also known as ESG. Shockingly here. So when we were outlining this topic for the podcast here, I was reading through this and I was like, oh man, I didn't even know this existed. To be honest, in my head, like I thought it might. So I'm going to turn it over to you, Ryan, have you break this down, and hopefully everybody can learn as much as I did about this.
Perfect. Yeah. So like you said, ESG stands for environmental, social, and governance. Really, I think anytime, almost every time you hear this in the real world, they'll use that acronym, in this case, ESG. And one of the interesting things with ESG investing is that it's basically an investment philosophy. So it's an approach to investing where you could take into account environmental, social, and governance sort of variables as you're picking different stocks or bonds to invest in. And there's different reasons why you might want to do this. One could be ethical. Another maybe you think you could get better returns, right? There could be different reasons why you do or apply this ESG investing. But what I think is interesting and maybe worth just hitting like right off the top is there is no real standardization or guideline around what ESG investing is. So I do see a lot of confusion out there. You may hear me say something here, go do a Google search and find some other information. That's very likely. There's no standardization around what really ESG investing is. But again, at its core, it's like an investment philosophy where you're using environmental, social, and governance variables around all three of those to make investment decisions. So that to me is really what it is. We'll dive a little bit deeper into the meat and potatoes, but just know, again, there's no real standardization around like how do you screen for these things.
Sure. And that was one of my questions that I had with this too. So I'm glad that you kind of tackled that right off the bat as far as like this. From what I just plugged into quick Google search, like it seems it's so broad on this topic, right. and there's no like specific oversight on it that is like, hey, if you are, practicing ESG, you are not in these, or you're not doing this. Right. Like there's some guidelines that we're going to probably get into here, but it's not like, once again, one thing fits in a bucket or anything like that. What's not one size fits all.
Yeah, I find a lot of these topics almost to be a little bit more political than I would care about too. And you'll end up seeing like, one person could think that like a biotech company is like doing these amazing things helping humanity, which you would think would sort of fall as a positive. And then somebody else would say, no, maybe they're doing tests on animals, so it's fails the ESG screening. So, it's just tough. It's like, okay, is it a positive or a negative, right? Different people would have different opinions on that, right? Or maybe there's like a marijuana company and it's a little bit polarizing and they're using it in the medical sense, right? So there's companies using marijuana or its extracts or whatever the terminology is in a medical way is that good? Is that bad? I don't know. Different people are going to have different opinions, right? And so it is a little bit polarizing. I find it to be a little bit more political than I would care for. Certainly different people see the world in different ways, and I think there is no real screening process or standardization, because how can you? There's not everybody sees the world under the same screen. So, but anyways, let's dive in. So ESG, you'll hear it referred to as a few different things, like sustainable investing, responsible investing, impact investing, or another common one is socially responsible investing. So SRI, socially responsible investing. Now, you could go Google and see, and I guarantee you could pull up probably some Google search right now and see what's the difference between ESG and SRI investing. And somebody's going to tell you there is some difference out there.
Right.
I've seen different people say one is like additive, one is negative, where you pick only the companies that do good things versus excluding the companies that do bad things. Right? I've seen all sorts of different things. Again, it's important to circle back. There's no standardization to this. So I think it's more appropriate to sort of talk about all these things and the philosophy of them as a whole, as opposed to cutting the nuanced differences between these things. But so ESG investing, socially responsible investing, for purposes of this conversation today, we'll call them basically the same thing.
I like it. Yeah, it breaks it down to, like, at least we don't have to get into the weeds on each one of them, but overall, like, it's that overarching principle of them all kind of being under the same umbrella, but not the same exact thing.
Perfect. Yeah. So some of these topics, so like environmental, so ESG, environmental, social, governance. So environmental, that's going to be where you evaluate things. So again, it's an investment philosophy. So you're trying to pick what stocks to invest in or what stocks not to invest in based on environmental concerns. So some of these might have maybe negative climate policies, or they might maybe like a oil company, right, or certain types of energy production might violate your ideal environmental standards. And so then you could say, okay, I don't want to invest in any oil companies, or I don't want to invest in XYZ, right? So some of the, again, things that like variables that people would take into account are like what the pollution levels, natural resources they're using, how they treat people and animals, again, climate policies, energy use. And those would be some sort of variables you could use to screen if you wanted to consider the environment factor. Then there'd be your social factor. So like, is that company encouraging their employees to volunteer? Are the companies like donating some of their profits back to local charities or community, or to their local community? What's like their record of like health and safety inside? If it's a manufacturing plant, are the people actually doing the work safe?
Right.
Or are there lots of accidents, right? That'd be some of the social concerns you might have. And then there'd be governance. So how transparent is the company? Are they using proper accounting methods, right? Are they showing, integrity? Is there diversity in the workforce and in leadership, right? These would be some of the governance type issues. How many conflicts of interest do they have? These would be some of the governance issues that you might use to sort of screen. So when you look at this under this lens, and you might say, okay, I'm going to screen out some of these companies that don't check a box for me on environmental, don't check a box for me on social, and don't check a box for me on governance. Then you could have, instead of just investing, say, in the S&P 500, right, the kind of the 500 biggest companies in the US, you could have a smaller subset of companies. And maybe there's only 3 companies that pass all your ESG screens.
Right.
And now you'd be investing in those 3 companies. So you could avoid things like, often the ones that I see with my clients would be people like wanting to stay away from maybe firearms or liquor or tobacco use. Those are the most common ones I see. There's also, though, like things around mining or nuclear versus coal power. But like, that's another one. It's interesting. You could talk to somebody about nuclear power.
Right. Yeah.
And one person could say, that's amazing. That's the cleanest form of energy there is. Another person could say, that just opens us up to like another nuclear disaster.
Right.
And so 2 different people could see nuclear power. One as being a huge positive and help the environment. One as being a huge negative and potentially harm the environment. And that's why this ESG screening gets so darn complicated, right? But hopefully, does that start to make sense, sort of what ESG is, how it's screening things out, and sort of the lens we're looking at it through? It
does, without a doubt, man. And hearkening back to what you said, that really... all of those things are politically driven for a lot.
Yeah, that's the hard part.
That is like I watch the news like every morning for like 30 minutes, and like one of these areas, like whether it be social, environmental, governance, is always talked about, is always being brought up in these different areas. And so to be able to, I mean, one, you'd have to do your due diligence on this to really like dive into these different areas. If you if this was something that was, you're really passionate about or want to make sure that you check all these boxes, like you would really kind of narrow down the companies you could potentially that you would invest in.
And so typically what you would do is, to your point, that's how it should kind of really be done. The reality is, think about how hard that is.
Yes.
And think about how little we like hard work.
Yeah.
So that doesn't really ever get done.
Sure.
So what ends up happening is these like mutual funds will create ESG funds. So if you say, hey, I want, I don't want to be involved in any company that sells oil or deals with tobacco, right? Just two random things. You could go find some mutual fund manager out there who's kind of done that screening for you, and they created an ESG fund, and they say, hey, my fund avoids all tobacco, alcohol, whatever, and we promote companies who have like a negative carbon footprint.
Sure.
Okay. Then you could just go hire them, and they've already done that screening for you, right? And so that'd be one way of doing this. You don't really see a lot of people doing it individually. They would typically hire, basically, buy particular mutual funds that have already done the screening, ESG mutual funds, if that makes sense.
Yeah, no, that definitely does. And you mentioned that this is not mandatory or like specifically. Does this have anything to do with with your Alchemy Wealth Management being a fiduciary? Do you have any specific responsibility? Does that tie into ESG or
not necessarily? So being a fiduciary means I'm like effectively legally required to put an oversimplification of it. I'm legally required to put my client's best interest ahead of my own. Hard part with that is like really I'm doing retirement planning.
Right.
So we're looking at getting them in appropriate retirement solutions. ESG is really more of an ethical decision for people. So if a client comes to me and they say, hey, we want to do ESG investing, I'll talk about the pros and cons with them, which we should do here in just a second.
Right.
But really it comes down to, after we've reviewed the pros and cons, if they say, yes, I want ESG, I want ESG solutions, perfect. Then we can get them in an ESG fund. But certainly there would be, that's just their own personal ethical, maybe standard. And again, as you can see, my personal belief on it is it's not even that it's like better or worse. It's just these different things, right? Like it's just, again, almost all these topics have two sides to the coin, and most of them again have something good and something bad, and it's hard to sort of extract the bad from the good. So it's a little trickier than that for sure.
Yeah. I figured it was probably a little bit deeper than we could probably get into on this podcast here. But let's talk about the pros and cons. Like, what would you say those are as far as balancing that?
Yeah, well, so I think one of the interesting, or kind of a thought experiment I like to go over is, so let's say that you, let's just pick on some company let's say Chevron.
Sure.
So let's say you told me, Ryan, I do not like Chevron, right? And this
spot on imitation of me too.
Yeah, perfect. And this is not investment advice, right? Yeah. We don't have an opinion on Chevron, but
not at all.
But so if you said, Ryan, I don't want to own any oil companies, Chevron included. Let's think about this, just how this works. So if you owned a share of Chevron right now and you wanted to sell it, and I said, hey, how convenient, I want to buy Chevron. And I now we go to a broker, you sell Chevron, I buy Chevron. At the end of the day, now have your share of Chevron. Mm-hmm. Did Chevron get any money from that transaction? No. No. That was really, we sold it on what's called a secondary market, the New York Stock Exchange, right? All these are secondary markets. So it's you selling directly to me, effectively, through a broker. A broker connected us together. Now you're selling your share to me. And so when you sell that Chevron share to me, Chevron didn't really care that much. Like there's some nuanced ways it could affect their business, but largely like that transaction, if it was $100, my $100 went to you, not to Chevron, right? And so when people think about, like, if they say, oh, I don't agree with Chevron, I want to avoid Chevron, owning Chevron stock, I like to go through the thought experiment of, okay, what does owning Chevron stock do for Chevron? If you go buy $100 worth of Chevron stock, remember that $100 isn't going to Chevron. When you fill up your car with gas,
right,
that's how you're giving Chevron money, right? And so a lot of times you'll see, like, so let's say keep taking oil, somebody will say, I don't want to put any extra money towards Chevron, but they're driving a gas vehicle, right? And they're using all these products that take gas for it to get transported to the grocery store to use that, right? And so it's like, by you not buying the Chevron, what's the actual impact on Chevron? Like, does it, there will be some like kind of lower level impacts of if everybody stopped buying their shares. But, I think it's important to realize I think a lot of people mistake when they buy a share, they think they're buying it from the company and the company's getting revenue from buying their stock. That's not how stocks work. Stocks are exchanging on the secondary market. When I buy your share of Chevron, my $100 is going to you, not to Chevron. If I want to make sure Chevron doesn't have any revenue, I need to stop filling up my car at Chevron.
Right.
So it's important to realize like they're not getting their profit from the stock. They're getting their profit from the products they're selling. And so that's a big misconception I see when it comes to ESG. People are thinking they can help reduce, they want to create cause in the world. And so they want to reduce the company's earnings by not buying their shares. That doesn't reduce company earnings. So that's an important point to make.
Yeah.
The other point I would make is if you wanted to make a difference at Chevron, imagine if you instead bought those shares of Chevron. Now you're a shareholder. Now you can vote, right? And some people will say, well, my vote's so small, it doesn't matter. Well, it matters just proportionally as much as buying the stock.
Right. Absolutely.
If your vote doesn't matter, then buying the share doesn't matter, right?
Totally. Yeah. That's a great way to break that down.
Yeah. So I would say, if you want to create cause in the world, probably just avoiding the issue isn't the way to actually create a change, right? And so just, I think a couple of things to remember here is buying the share is not direct profit for the company, right? So that's a big nuance difference to remember. And then number two is if you actually want to create a change, heck, the best way to actually have a say in that company is to be a shareholder. Being a shareholder doesn't mean you support the company. Being a shareholder doesn't mean you're going to go promote it. Doesn't mean you're going to try to increase their revenue. It simply means that you are now a shareholder. You're a part owner in the company. And now you have, in theory, a part say on where the company goes moving forward. So you could own Chevron, maybe help get Chevron to, in theory, again, you would be a small piece of this puzzle, right?
Sure.
But help encourage Chevron to maybe move away from oil and move to some other more environmentally friendly fuel source. And now it's great for your stock. You're an owner. It's going to be great for you. It's great for everybody. You've created change, right? So it'd just be something I would just, again, a theoretical experiment I like to go through with clients. I find a lot of people first hear about these ESG investments. They say, yes, oh, I like that. I don't like XYZ. I want to avoid XYZ. And then we actually start thinking about, okay, is doing it through your investments the most impactful way to create change? And sometimes it's not. And sometimes it's, how we spend our actual money, how we, them are like, affecting their revenue, how we, how we like just interact in the world is really what chooses what companies are excelling or not excelling, right? So yeah, I find that kind of experiment with clients to be interesting.
Absolutely, man, and that really gives some food for thought for individuals about like, okay, if you are not comfortable with this, or you don't want to give your money to this company, it's like that's not exactly what buying a stock is or being invested in that stock is. It's what does that company do, and what are you doing on it? Is it, okay, maybe I buy an electric vehicle, or is it, how are you trying to, and we're talking specifically with oil there, but how can you make that difference? And I don't know as though, like, are you willing to sacrifice potential returns for this? Like, if you're like, hey, like, this company is very profitable.
Right.
I'm going to make money. So
I think there's two. Yeah, I love that point, and I think there's two interesting things with that. So let's pretend the company is more profitable. So let's pretend we keep using Chevron example. Let's pretend Chevron's super profitable. Well, heck, if you buy Chevron stock, you could get profit from them and go use that profit to somehow, again, create change in the world, whether it's donating to a nonprofit that's doing something, right? Or using it to invest in an electric vehicle or put solar on your house, right? So it's interesting. Like if this is a profitable organization, maybe the best tool for you is actually own that organization, right? Take advantage of the profits you're getting from that organization. Don't go buy, products that support the organization, but buy products that support your cause. So again, solar panels or electric vehicles. So interesting, again, thought experiment, but let's play a little devil's advocate there.
Let's do it.
So some people who invest in ESG, they invest in ESG because they say, Ryan, the returns are better in ESG. If you think about all the companies who have governance issues, it's just a problem's waiting to happen. They're not going to be the most profitable. Maybe they look profitable right now, but that's short-sighted. Or, the companies who are doing bad things for the environment, sure, maybe, that's not going to be the most profitable company in a 20-year window. The ones who are able to get to carbon neutral or carbon negative, those are ones that are going to be able to be most successful. And so this would be a good screening tool to help me find the most profitable companies in the country who I think, this could be a tool to, in theory, get you better returns, right? And that's just tough because if you go talk to somebody selling ESG investments, they'll tell you ESG investments are better. If you go talk to somebody who's selling non-ESG investments, they'll tell you non-ESG investments are better. And there's no real clear answer there yet.
Yeah.
So I would tell you, I don't know if ESG investments could get you better returns. I don't know if they could get you worse returns. I don't think anybody really knows. Only time will tell. But that would be a little devil's advocate where I see people on both sides of that where they say, yeah, I think Chevron is profitable, but I just don't want to own them and I'm okay taking lower returns. Or other people saying, no, all these companies that violate these ESG standards are not going to be as profitable long term. So I want to own ESG because I think they'll make better returns. Ultimately, I think these shouldn't be the variables that people are probably using when making like long-term retirement type decisions.
Sure.
I do think there are fair ethical considerations. So when clients come to me and like we go through these pros and cons, if at the end of the day they say, no, I do want to have ESG investments, perfect. We have solutions for them. And that's completely rational way. I just think people need to go through these exercises, realize what the pros and cons are, realize what the implications are. And oftentimes when I have people coming to me and we go through these exercises, they say, oh yeah, I guess you're right. I thought by buying their stock, I was kind of giving them revenue. And then they start saying, well, yeah, I guess no, actually, no, I don't want the ESG. I thought it was something different. I thought it worked differently. So again, lots of misunderstandings around how it sort of works. I don't think ESG is bad. I don't think ESG is good. It just is what it is. And I think there needs to be more clarity out there around what exactly it is and how it could help you or could hurt you.
Absolutely, man. No, that is very well said and gives, hopefully, I mean, if this was a topic that for myself I found very interesting just because of almost the lack of, I don't want to say oversight, but like the lack of standards that go with it, that everybody can have different standards on what they want to do and how they want to measure those environment, social, or governance factors overall. And so, it's definitely something to think about, but then also like consider what's your end goal? Like, what's your goal? Like as far as getting there and what are you comfortable with doing overall? So awesome, Ryan. I think that was really, really insightful here, and we'll go ahead and we'll take a quick pause. Be back on the other side for a personal question here. Hang tight.
And now, to put the personal in personal finance.
Welcome back to the Fiscal Physical Podcast here. As you have probably learned through hopefully listening to over 20 of these episodes before, I enjoy myself some trivia, and I enjoy posing those questions to my good friend Ryan Nelson as well, too. So I have one today, Ryan, that was, frankly, I had to look it up a couple of times here, and I'm still not sure about the validity of it, but we're going to roll with it. So,
sounds easy.
Yeah, absolutely. Yeah. It's related to money, so hard to say. So
let's try it.
So the question is, how often and how much does the government? Or sorry, let me back it up here. How often does the government print new money? The U.S. government. How often do they print new money, and how much do they print on average?
I was under the impression they were constantly printing it. Basically,
they are constantly printing. Absolutely, it's actually the Bureau of Engraving and Printing who actually does it, not like the Fed. Most people think that's what it is. But how much on average, do they print per day?
Oh, God, it got to be an astronomically high dollar amount. $72.
Yeah, nailed it. Yeah.
Yeah. Do you want small bills or big bills?
Right, exactly. Yeah. Change.
Yeah. I really don't even know how to take a stab at this order of magnitude. I know they're also destroying an absurd amount of money every day too, and just kind of replacing it, circulating it. And then obviously sometimes they are putting more money out too. God, I wonder how much they are going through a day. I'll just take a stab at it and say, I'll say a nice round $1 million.
So it's actually, I was blown away by this number overall. Yeah. According to this, actually Edward Jones site, they have a bunch of trivia on it. The Bureau of Engraving and Printing produces $690 million a day.
$690 million. Whew.
Is what is being printed.
Yeah, that's crazy.
And I also was like, wait, how much are they destroying? Because and there's not clear numbers specifically on that, but this is like obviously an average because certain days are less and more, but it is in the hundreds of millions of dollars every day is what's being printed. And I was like, how is that sustainable?
Yeah, that's mind blowing.
Yeah.
I think there was some movie out there, a TV show where the whole plot of it was to get in, like infiltrate the place that destroys the money and kind of steal the money and fake that it was destroyed. I can't remember what it was or anything about it, but interesting concept. And there is so much money being destroyed as well.
Being destroyed, being created, and you're just like, oh, wait, like how much? And so it ends up being like, in terms of currency that's actually created, it's 37 million currency a day.
Wow.
Like as far as like the actual physical product. So that could be $100 bills, $20 bills, whatever. But like the total amount is incredible.
Yeah,
man.
interesting.
It's
really interesting.
I read this and I was like, nah, that can't be true. And then I like looked it up, and it gives like varying between like 50 million or whatever, but like it's in that 600 range. Like,
wow,
it's incredible amount.
Huge numbers.
But cool, man. That's all I got for you today, and so we'll go ahead and wrap this episode up. Once again, appreciate the listeners. Check us out wherever you get your podcasts. And Ryan, what do you got for us at the end here?
Yeah, thanks. As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.